All right, welcome back. In this video, we're going to be talking about how do you value a business. So whether you're buying or potentially selling, what's the actual worth of the business? How do you come up with that? We're going to go through some examples, and I'm going to draw out some factors that are going to either increase the valuation or decrease the valuation accordingly that you should be considering when going through this process. For those of you who aren't familiar, I'm Rick Vazza, president of Driven Wealth Management, certified financial planner, as well as a business owner. And we're going to be talking about a couple of the factors that are really important from both the buy as well as the sell side here. As always, if you like the video, appreciate you hitting that like button. It helps more people see it and grow the audience, all that good stuff. And if you like more videos like these, be sure to subscribe so you get notified when they come out. All right, so let's get started. The first thing that we're going to do, we're going to use an example from Biz Buy Sell. So this is a brokerage website where people can go to post their business that are available for sale. You can search for these. It's free. And this is one of the many different ways to come across a small business. Not necessarily the best way, but it is a valuable way and a good starting point. So the first thing we'll do, I'm here in San Diego. We'll just take a look to see what is available in the area. This is going to give us a listing basically for everything that's posted here. And once that goes through, you'll see it's actually a pretty large amount of businesses that are going to be available. Looks like 154 just in the area. So one helpful starting point is actually narrowing it down based on the industry that you're particularly interested in. So just for the sake of it, since I have a service business, we're going to talk about, we're going to take a look at service businesses. And I should mention this is really important to distinguish between, cash flowing businesses that are actually earning money on an ongoing basis versus, like, let's say, for example, a tech company where maybe you're trying to grow the user base with the goal of monetizing later. So this is really going to be about focusing on business now. It's a follow-up to our last video where we talked about sellers' discretionary earnings and EBITDA. So if you're not familiar with those two key important phrases in small business valuations, be sure to check out the last video. I'll put a note in the link in the show notes so you can check that out. It is important as a starting point. So basically, we have all of these businesses here that are available in the service industry. Now, what we are looking at, there's two key numbers that you're going to be seeing. The first is the actual asking price of the business. So you can see here, we're just looking at this first one that showed up. They're asking for $1,050,000. The second is what they're calling cash flow, so $411,663, most likely from 2020 data, excuse me. Now, that cash flow is more often than not going to be synonymous with the SDE, so seller's discretionary earnings that we talked about in the last video. Basically, what was the cash that was generated to a potential acquirer of that business. And basically what we have there, you kind of back of the envelope math, a little under a 3 multiple on this business. So you think $400,000 in earnings, multiply that by 3 would give you a $1.2 million valuation. So we're a little bit below that from that standpoint. So what you can do is click into the business and we'll start getting some basic background information. And then I'm going to talk about some of the key considerations that you'd be thinking about as you go through further due diligence. So starting point, they're just going to give us a basic business description. Really nice to see here. This business has been operating since 1986. So that's really attractive right off the bat. Why? Because typically that has a long track record, means they've stayed in business a long time, which is a general, good starting point. Also likely have a lot of customers, perhaps that they've done repeat business with, and hopefully have a good reputation within the community as they've been able to stay in business for so long. Also, likely one of the questions that we're going to be asking is, why is the seller selling the business? What are they doing? Pretty common with a business that old, they're probably going to be retiring. And so I wouldn't be surprised if we see that as we go along. Absolutely, owner is selling in order to retire. So no surprise there, which is also typically a pretty good sign. So they're going to give us some basic descriptions on pretty high level, but business specialized in design and installation of cabinet refacing, featuring multiple product lines. So that's good to know, and we'll talk about that a little bit more. Very short transition time, so 3-week transition period. If you have a already background in this industry, that may not be something that you really need nor care about. But if you're new to this industry and thinking about coming into it as a first-time buyer, that may not be enough time, so it might be something you have to look at negotiating through the process. 150,000 in equipment and fixtures. So sounds like the majority of what we're paying for is goodwill. Goodwill meaning that list of customers, good brand reputation in the industry, probably some operations, ideally that are already streamlined to make the business run effectively, and likely some key employees who are very knowledgeable in the space. One of the key considerations, though, that we're going to be going through as we make this decision is, is it worth acquiring the business and obviously paying for that extra goodwill versus if you were just to, take 150,000, buy that equipment, pay your employees out of pocket on whatever financing you're able to obtain or have already. That could be significant cost savings. So we're having to balance, is that buy decision worth the added costs associated with starting in that case. And that ultimately would be part of our due diligence process. Looks like they have 7 full-time employees, experienced staff handling all aspects of the business. That's what we're going to talk about in a little bit. How involved is that owner? And ultimately, if you're interested in more details, you can contact the broker here. Really key information right here is a contractor license is required. So this may be a deal breaker right off the bat for many people. If you don't have a contractor's license, this is obviously a pretty significant hurdle. One of the ways around that would be potentially partnering with the seller, basically renting their license. But again, if they're looking at a 3-week transition, that may not be something that they're even willing to entertain. So that would have to be explored. A lot of times a broker will let you know right off the bat if that's even on the table or not. So it might be something that kills the deal automatically if you don't have that contractor's license. And if you are looking to obtain it, just as an FYI, it does typically take a bit of a process. So it's not just something that can be done overnight. All right, so some pretty basic background here. How do we know if what they're asking for is reasonable? That's really typically a good first starting question. So one of the things that we can do off the bat is get an idea of what is the going multiple for similar businesses in the industry. So again, we had, just to recap, call it $400,000 in earnings. Likely they're referring to SDE at a business of this size. We have essentially a 3 multiple on that business. So one of the things you could do, we could take a look at biz buy sell, see if there's any other businesses that specialize in cabinets available. You could even extend beyond San Diego, so just to see what nationally some of these businesses are asking for in terms of that multiple. Make it idea of just giving you some sort of baseline or benchmark to go off of. And then there's going to be different factors that are either going to make this business more or less valuable to those peers. And that's ultimately what we're going to cover next. Should you be paying a higher multiple or a lower multiple relative to the industry average? So what are the first things that you're thinking about? Well, these are in no particular order, but just some of the key things that come to mind. For me, it would definitely be that owner. So how involved is the owner? The description says that there's key employees that could take over, but we definitely want to confirm if that's actually the case. That also may lead us to customer concentration. So, are there only a few customers who are heavily concentrated buying the products that this company offers? And if so, how important were the owner's relationships toward those customers? Because if they're leaving, is that going to be a problem for the business? Also, what are the margins? Does this business operate more or less efficiently than some of its competitors? That would be something I'd want to know. Again, we're only buying $150,000 of equipment included in this asking price. So what is the status of those assets? Are they worn out? Are you going to need to replace them fairly soon? Or is that really the fair market value of the assets in question? So a couple of things here. And then another one that I'd be really interested in, considering they're doing the cabinets and they mentioned multiple product lines, is that product line mix. Basically, as we're going through due diligence, we're going to be able to start looking at the breakout of the revenue and profitability of those different product lines to make sure that they are in fact profitable, and maybe one is losing money, one is more, so you can start to make some business decisions from there. Ultimately, as you can see, as some of these things become more or less attractive, that's going to make us be either more or less willing to pay this multiple. So, if they have a high customer concentration, they're heavily dependent on the owner, you could easily see, hey, there's no way I'm paying more than 2 times or potentially even less than earnings for that, given all the risks involved with the owner leaving. If they're not dependent on the owner, they have high profit margins, that diverse, great product mix, you could make an argument, hey, maybe this thing's actually worth 4 times and we're getting at a pretty great price point here. So just a couple of factors that go into this, but ultimately are going to help move the needle as you're making a decision on, is this a fair price that's being asked for the business? Obviously not all-encompassing, but a great start as you're beginning the due diligence process. Ultimately, at that point, you'd be signing what's called an NDA. That's the non-disclosure agreement. The broker would send you over more detailed information, and you'd be able to get going there. But hopefully this gives you just a nice high-level view, whether you're a buyer or a seller potentially looking to make that sale, on some of the key items that you'd be thinking about just from a baseline starting point, if this is an attractive business or not. Again, hope you liked the video. If you have any questions, be sure to reach out on Twitter. I'm at Rick Vazza, V-A-Z-Z-A, where I'm more active and can more easily converse with you, and hope to see you in future videos. Thank you for stopping by.